This week had a lot of moving pieces, so let's get straight into the Iran situation that continues to drive everything. The market did start interpreting things a little differently this week. Early in the week, bonds actually rallied even as oil hit $115 a barrel, which is a change. And traders seem to be starting to worry less about inflation from oil and more about what a longer conflict is going to mean for the economy. That's in the long term anyways. And the fear of a recession is seeming to outweigh the fear of inflation, at least for now. And that's actually a better environment for mortgage rates. Fed Chair Powell helped that along. He said the Fed can look past oil price increases and said that hiking rates would not help because by the time it had an impact, the oil price shock would likely be over. And he also said that the labor market is not adding inflation pressure. Markets like hearing all that. And several Fed members do seem to feel similarly, and Stephen Moran is actually now calling for 100 basis points in cuts by the end of the year. JOLTS reinforced the labor story, and we've been telling you that for months. Job openings came in weaker than expected, hiring rates at its lowest level since 2011, and the quits rate is almost at its lowest since 2014. People are not quitting because they don't think they can find something better, and companies are doing less poaching and minimal hiring in general. That's obviously weakness in the labor market. And then this morning, we got the BLS jobs report, and we've seen this movie before. The headline showed 178,000 jobs created, which is about 3 times what was expected. And here's what is actually going on. The prior month was revised from 92,000 losses down to 133 losses. And healthcare and returning strike workers accounted for over 100,000 of those new jobs. And the household survey showed 64,000 job losses in March. So the unemployment rate dipped only because the labor force shrank because a huge number of people stopped looking for work. And wage growth was weak too, with average earnings down year over year. ADP and Revelio, though, showed 62,000 and 19,000 jobs respectively for the same period. Obviously a far cry from this BLS number. But some reports out there are showing significantly more sellers than buyers nationally. Affordability is one thing, obviously keeping buyers on the sidelines. And that gap is really mostly being seen in Sunbelt cities where they overbuilt during the pandemic. So turn to a local expert for what's happening in your market and reach out if you need help improving affordability for clients shopping or sitting on the fence. Next week, we're going to get PCE and CPI inflation reports. CPI report is going to capture the recent oil price increases, which is not going to be friendly to mortgage rates. But I'll see you next Friday. Have a great Easter and a happy Passover.